everyone, let's start this video with a situation. Assume that you've been investing your money in stocks and equity mutual funds for years, building your portfolio, compounding steadily to achieve your financial goals. But suddenly you need cash. It could be an emergency, maybe a business related expense, medical expense, anything. But now you're stuck with a tough choice. Should you sell your long-term stocks and break the compounding? Or should you explore a smarter way? By the way, this actually happened during COVID period. One of my friends needed money due to a medical emergency and he ended up selling his stocks and mutual fund investment. And he missed out on the wealth creation opportunity in equity during COVID rally. But what if I tell you that you can get access to funds in case of emergency without selling your long-term investments in stocks? That's where in today's video, I want to share a very interesting concept of loan against security. I'm sure many of you would not be aware of this concept. So we'll deep dive into what is loan against security, how it works, and pros and cons of loans against security. As I mentioned earlier, it is a very useful feature to get access to funds in case of emergency. Since it's a relatively newer concept, watch this video till the end. Alright, let's get started. As the name suggests, loan against security is a facility where you can borrow money by keeping your stocks, mutual funds as collateral. Think of it like a gold loan, but instead of your jewelry, you use your stocks or mutual funds as collateral. Please note that when you keep your stocks as collateral, you still own the stocks. It means your stocks keep compounding in the background. Now, before we get into how exactly it works, let's first understand some of the use cases. That is, when would you need to opt for loan against security? First of all, let's be very clear that loan against security should not be used to fund your lifestyle expenses or discretionary spending like vacation, buying a phone, party, and so on. Also make sure that you don't use loan against security to invest in volatile instruments like crypto or F&O trading or risky stocks. Plus, if you already have a personal loan, credit card dues, or a home loan EMI, adding loan against security can increase financial risk. Then when should you use loan against security? Well, first use case is if you need funds for a family emergency, but your stock investments are for your long-term goals like child education or retirement planning. Second use case is if you want to invest in a new business, but you don't want to touch your long-term equity plan. Then third use case is if you're buying a home and need temporary fund to bridge the down payment, then loan against security can help without panic selling. On top of this, loan against security can be super useful in building a strong credit history. Your credit score is largely based on repayment history, which makes up 35% of CIBIL score. Since loan against security is a secured credit facility, lenders report the loan activity to credit bureaus like CIBIL, Experian, and so on. Hence, making timely interest payment shows responsible credit behavior and it positively impacts your credit score. If the loan is prepaid or closed without default, it further boosts your credibility as a borrower and build a solid CIBIL score. Now let us understand how loan against security works. So first thing you should understand while opting for loan against security is LTV. It is basically a ratio that tells you how much loan you can get against the value of your asset, which is basically your stock or mutual fund portfolio. For example, in case of Zerodha Capital, this LTV is 45%. It means your approved security, that is your stocks or mutual fund, are worth let's say 10 lakh rupee, then you can get a loan of up to 4.5 lakh. Please note that high quality large cap stocks and mutual funds are generally eligible for loan against security. But some small cap or volatile stocks may not be accepted or might come with a lower LTV ratio. Generally, NSE's Group A security and BSE's Group A and B securities are accepted. As far as option for loan against security is concerned, it is very simple. For example, I use Zerodha and it has Zerodha Capital that offer loan against security feature. If you visit this platform, you can find the details like interest rate is 11.5% per annum, minimum value is 25,000, there is direct cash transfer to your bank account. Then you can see the steps regarding how it works. So step 1 is just select the securities and quantities from your Demat account against which you wish to avail the loan. In step 2, review and digitally sign the loan application. Step 3, wait for approval, which is usually 1 working day, provided all documents are right. And step 4 is receive cash in your bank account. Here you have apply now option. When you click on it, it will ask for online verification. Once you complete that process, it will direct you to your holding. Just select the security and quantity. You will get a key fact statement related to charges. Click on continue, then select the purpose of loan, click on agree, then e-sign the document and you are done. Please note that most LAS loans have an interest-only EMI structure. You only pay the interest every month and repay the principal when you are ready, within the agreed tenure, which is usually 1 to 2 years. Now let us discuss the pros and cons of loan against security feature. The biggest advantage of loan against security is easy access to funds at the time of emergency. You can get funds in your bank account with a few clicks within 1 working day, provided the documents have no issue. So it provides a lot of flexibility, and the interest rate is also reasonable in the range of 10 to 12%. As compared to personal loan where interest rates are in the range of 12 to 18% and credit card interest rate charges are very high. Plus, loan against security helps in building a good credit score provided you are a disciplined borrower. However, there are risks that you must keep in mind while opting for loan against security. So first risk is margin call risk. If the value of your pledged security falls sharply, the loan to value, that is LTV ratio, gets breached. For example, if you took a 4.5 lakh rupee loan on 10 lakh worth of stocks and market drops 30%, your pledged value becomes 7 lakh. Now your loan to value becomes 71%, which is higher than the allowed limit of 45%. In such a case, the lender may ask you to repay some loan or pledge more securities. This is called margin call. If you fail to act, the lender may sell your pledged shares, potentially at a loss because it is sold at the current market price, to recover the money. Hence, if you opt for loan against security, I would highly recommend keeping some buffer and do not borrow more than 30-35% of your portfolio value. For example, if your stocks are worth 10 lakh rupee, you can borrow money till 3 to 3.5 lakh rupee. It will also help you remain stress-free during volatility, because in case your portfolio value falls, you won't need to arrange funds urgently or sell at a loss. Then second risk is the temptation to borrow easy money. Since you are getting easy liquidity, there's a risk of taking more loan that you can handle. So you need to control your urge and ensure that you don't over leverage. Please note that while your stocks are pledged, you cannot sell them freely. Okay, let me not stress this video further. Before we wrap up, here's the most important takeaway. Loan against security is a powerful tool, but like any financial product, it comes with responsibilities. If used wisely, it can help you unlock the value of your investments without breaking the compounding engine. Whether it is for emergency, a short-term opportunity, or just creating liquidity. Loan against security gives you flexibility without forcing you to exit your long-term holding. But, and this is crucial, don't treat it as free money. The market does not always move in your favor. If your pledged stocks or mutual fund fall in value, you may face a margin call. So always borrow well within your limit, keep a buffer, and avoid using it for speculative purpose. At the end of the day, personal finance is about discipline. Products like loan against security works best when they are part of a well thought out financial plan, not a shortcut. So stay informed, stay cautious, and use the tools available to you smartly. If you found this video useful, do share it with others who might benefit from it. And if you have any question about loan against security or want me to explore more such concepts, let me know in the comments. Thank you for watching this video. I'll see you next video. Till then, take care.